Hello everyone, Justin with Deep Dive Stocks here, and today I thought we would do a quick dive into the Binance and FTX fiasco and look at how a liquidation event might spill over into the equities. And to do that, I thought it would be a good idea to look at two of the stocks that have very close ties to the crypto world, and that is Marathon Digital and Coinbase. The idea is that if those two stocks are stable, then the equities market might be protected a little bit from a liquidation event that is occurring in the crypto realm. If those two stocks aren't that stable, then that liquidation event might spread as a contagion into the equities market, very similar to what we saw yesterday on the 8th when SPY took a large dump as the news was unfolding. So let's go ahead and get started. We can start with Coin's VOREX. As we see, VOREX fell into the propagation zone at the start of the month, which is a indication that the stock is at risk for a persistent and steady decline in price. Obviously, this isn't the best time to find a potential crypto liquidation event when a stock is already fundamentally unstable. It might be interesting at some point in time to go back through once all the dust settles to see if there was anything that actually started this chain of events back at the start of the month, which ultimately pushed VOREX into the propagation zone. Next, we can move over to Coin's gamma hedging heat map, and it's a pretty interesting orientation. We see that the orientation of the hedging, or whether or not the hedging is purchasing or selling, is directly associated with volatility. As volatility decreases, options dealers are going to have to sell shares, and as volatility increases, options dealers are going to have to purchase shares. What's interesting is that although this is an unstable hedging heat map, it does incur some stability because if volatility increases, such as during a sell-off event, we see that the stock will be pushed into purchasing support, which will help provide a passive bid and maybe help stabilize the stock. However, with VOREX in the propagation zone and with the fact that hedging can be fleeting at times, this isn't the best indication for a long-term stability outlook. In a very similar vein, we can move over to Marathon Digital and look at its VOREX. We see that just like Coin, at the start of the month, VOREX fell into the propagation zone, which brings with it the same interpretation: high probability of persistent and steady decline in price. And I think it's pretty interesting that both stocks had their VOREX fall into the propagation zone at around the same time. And I think once the dust settles, it'll be very interesting to go back through the data to see if anything was actually happening below the surface at the start of the month. Moving to Marathon Digital's gamma hedging heat map, we see that it's in an island of purchasing support right now, but as I stated earlier, purchasing support or even selling pressure mediated by the options dealers at times can be somewhat fleeting. The idea is that once those positions are hedged, unless there's more significant movement in the underlying equity, more hedging isn't required. So the idea with these types of orientations is that that purchasing support kind of has to jumpstart the retail interest to provide organic bid to the stock. Otherwise, if there is significant selling pressure, supposing maybe during a liquidation event, then that purchasing support will quickly run out and be overtaken by organic selling, which would then push the equity into the selling pressure, which starts at about $7.50. Once the equity falls into the selling pressure, if the price continues to drop, the options dealers will have to sell more shares, thus pushing the stock down lower. Thus, we see in the equities environment, there isn't a lot of leeway or a lot of place to put a shock event such as a liquidation in the crypto world. If that starts to spill over into Marathon Digital, Coinbase, and I imagine some of the other crypto stocks, things do not look like they are poised to handle that shock. We see with both VOREX into the propagation zone and the gamma hedging heat maps, things don't look good. If we move over to the crypto world, we can use LDPM to look at the liquidity status on Bitcoin to give us a general sense of how likely a liquidation event may start occurring if, as the stories kind of are coming true, a large amount of money and crypto is going to be required to help FTX out. We can quickly start by looking at LDPM on the 1 day for Bitcoin, and we see that, oof, for lack of a better word. LDPM is the purple line, and when a stock is below LDPM, it is quite a bearish finding. The more distance between LDPM and the current price, the more bearish of a finding it is. Currently, Bitcoin at the time of this screenshot was at 17,798. LDPM is way above at 20,252. That is quite a significant difference and brings with it some very significant bearish indications. Additionally, if we look at a smaller time frame to get a more granular view of liquidity, we can look at Bitcoin on the 4-hour, but we see a very similar story. Bitcoin at 17,820 and LDPM is at 18,932. So LDPM is above the price, which is bearish, and it is significantly above the price, which adds to the bearishness. In looking even more granularly at the 1 hour, we see that LDPM is above Bitcoin, but not quite as much as the 1 day or the 4 hour. Whereas Bitcoin is at 17,822, LDPM is at 18,070. So we see that in the crypto environment, things are very bearish looking. We have this unfolding story about Binance and FTX and a potential liquidation event or hostile takeover. And then if that were to spread over to the equities, we see that the two main stocks associated with the crypto world, Coin and Marathon Digital, are on very unsteady grounds. They entered this unsteady ground about earlier this month when folks fell into the propagation zone. And although the gamma hedging heat maps will provide some support in the event of a sell-off, we can't bank on that purchasing support to be there continuously. Overall, this is a very interesting event for the integration or the connectedness between crypto and the equities market, and it is something that I would like to dig in a little bit more. But for now, that's all I have for you guys. I hope you enjoyed, and I'll see you guys next time. Bye.